Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, October 4th, 2024. Ron Quaranta here with my amazing colleague and co-host, David Brill. And joining us now in the midst of transit is the one, the only Josh Klayman. Josh, how are you?
Great, thanks. I'm actually not in transit, though. I am at Wharton Reg Tech. I've stepped out so that I can film this with you, although I realize I'm having some weird lighting issue.
No worries. David, Josh, good to see you both. Before we begin, for everyone in the audience who joined us, thank you so much for being here on LinkedIn, on X, on YouTube. If you've got questions for Josh or David or I, please feel free to put them in the chat. And obviously, before we begin, just our usual disclaimers. Nothing discussed should be considered any sort of advice or recommendation. And obviously, David and Josh and I, the things we do discuss are really our opinions and don't necessarily represent the opinions of our individual firm. So David, Josh, another week has gone by. We are steaming into the fall. We are now in Q4 of 2024. David, you and I did a little prep early on. Let's kick it off. And I know we talk about economic data way too much, David, but I'm going to start here. We got to tie it into crypto because I think it's important. And for everyone in the audience, David and I wake up Friday mornings waiting for the 8:30 data. And of course, David, the jobs data was ridiculously, blown out of the water. Everyone was anticipating 150,000 new jobs. It was like 250,000 new jobs or something on the lines of that. And the markets went through the roof. David, why is that data important? And, again, when we talk about crypto, we're seeing crypto respond to these macro changes and data points. What are your thoughts on the data?
Shocking. But then we do have an election in a month, so maybe they're not so shocking.
Mm-hmm.
I was actually focused on the upward revisions for the last couple of months, which I also thought was interesting. I think this also makes a real case for why we all thought that 50 basis points was too much.
Yeah.
Because these strong reported job numbers don't really necessitate a 50 basis point hike last month. So I think that I think all of us are surprised. I think the timing is a little interesting.
Yep.
But how it relates to crypto in particular is that we saw more easing happening more quickly, and more easing is better for crypto. A weaker dollar is better for crypto. More liquidity is better for crypto. So this, I would say, is not a bullish indicator for crypto.
David, when we look at the data, and David, you and I and Josh have talked about interest rate cuts, and I can't believe we're boring Josh with what the Fed's going to do at the next meeting.
You're not boring me. I have questions for you.
I've got to assume, David, 50 basis points for the next Fed meeting is off the table, given the growth we're seeing. Unemployment's down to, it's actually very close to 4%, which no one thought we would have gotten to 3 or 4 months ago. Are you surprised at how crypto's responded? We've seen crypto trade in a pretty narrow range, and then we saw Bitcoin break the floor of 60,000. And in the context of geopolitical stuff that's going on, you would have almost anticipated flight to safety a la gold. But that hasn't happened. But then jobs data comes out and crypto goes through the roof. How does that play into the strategies that you and I have looking at crypto markets?
So I think we've made this distinction before, and I'll make it again. I think when it comes to geopolitical issues and unrest, I think crypto is treated as a risk asset and it sells off. I think when it comes to debasement of the dollar and dollar weakening, then crypto goes up. That's how I make the distinction, because every time, we saw in COVID and we've seen in other events, when there's unrest, Bitcoin sold off with other risk assets. So that's a distinction I would make.
Josh, weigh in here now that you've got a macroeconomic degree as part of you knowing me and David, I think. But I'd love your perspectives on some of what's going on.
Thanks. I mean, my perspectives really are limited somewhat to questions for you guys. One of the things that comes to mind is, this feels a lot like whiplash, frankly, after having the downward adjustments, now upward adjustments, and, very rosy 4.1, I think, is the number that I saw for unemployment.
Yep.
At what point, number one, should we not necessarily be trusting the numbers? And at what point, too, should, although this is more aspirational than anything else because people are going to do what they're going to do, but should people not be reacting much to these numbers,
Josh,
given that it's a moving target?
Josh, it's funny that you raised that. And David and I often joke about the kind of whiplash of how markets react to the data. And you've opened the Pandora's box of how David and I feel about data that comes from, the Bureau of Labor Statistics and other data. David, let me start with you there because the data is problematic at best. And there was a fascinating article in the Journal this morning that I'll talk about in a moment. But David, what are those data problems and why do markets respond the way they do, including crypto markets?
Well, everybody likes having, targets and things to focus on and can point to. And data, ideally, is something that you can't say it was this or that when you have a certain number. So there's some certainty to it. But I think we have to become less data dependent and just sort of more forecasting forward because, like you both said, the numbers just are too choppy. You can't make decisions on a number that you get revised significantly. And the last thing I want to say is, obviously we all want a strong economy, but we did revise down by almost 1 million jobs over the past 6 or 9 months, the jobs for this year. So I think people should just look at it with a fuller lens as to these revisions for the last couple of months.
David, it's interesting as you say that, and it's a really great point. And I mentioned that article in the Journal this morning, which really former heads of the Bureau of Labor Statistics, their names escape me, but I'll try to dig up the link for us, really complaining that this important agency that collects this important data that moves markets up or down has a budget shortfall and is not getting the funding they need to collect the data that they need. And for a long time, the data they collected, believe it or not, was in-person kind of mailings and knocking on doors. And only in the past few years did they go to kind of a web portal for data that collects the data. And even that web portal and that capability is outdated. So Josh, to the point you made earlier, this really, really important data is falling further behind in a world where almost all data is becoming real time. So, the argument I believe that they made was that these data discrepancies and adjustments will just increase unless, government really expends a little bit of, I think it was like $25 million, David, not exactly a multi-trillion-dollar kind of program. These problems will persist, and the spillover goes into crypto. And the reason it goes into crypto, and Josh, I think you and David and I understand this, is that crypto has more institutional engagement than ever before. And these organizations need this data, and the data is suspect, sadly.
Maybe it's another use case for blockchain. But
another use case for blockchain, and David's next startup has just come onto the whiteboard. David, Josh, we'll come back to market data, David, and I'm not going to make predictions, but certainly you mentioned there's an election coming up. But, in the context of all of this, Josh, I want to pull you into this as well, because it's never a dull week when we talk about regulation and when we talk about enforcement and we talk about crypto. The thing I wanted to talk about that we didn't even have on the prep agenda was the SEC's appeal in the Ripple case, which kind of was market moving. David, remind me, I think XRP was off 11% or so on the news. Josh, can you kind of bring the audience up to speed on why the appeal and where this might go? You're on mute.
I think if we think back to some of the holdings from Judge Torres's decisions in Ripple, in many cases, people have viewed it at least as a partial win for the digital asset space and blows to the SEC. Part of this, where this has come up, has to do with treatment of digital assets differently in different scenarios. So, as you may recall, in Judge Torres's opinion previously, it had said, or she had said rather, that essentially the institutional purchases, right, were offers and sales of securities, right? Whereas the programmatic blind bid asks on trading platforms with respect to Ripple were not involving securities transactions. And similarly, there were statements made as to, for example, employee compensation and things like that, as well as, sales by certain principals. and whether those constituted securities transactions. Importantly, this sort of split the baby, right? And other courts, including, I believe, Judge Jackson in the Binance case, have cited to the Ripple decision. Others have not. Now, I may be mistaken about exactly which judge cited. However, we have seen reactions by certain judges, including, for example, Judge Rakoff in SEC v. Do Kwon Terraform Labs, and in certain other instances where the logic set forth in the Ripple opinion was not embraced. That being said, I think it surprises me if folks would be surprised in many cases that the SEC would have appealed, because this would seem to be, I mean, the SEC did try an appeal right in the middle of the case, right? The interlocutory appeal attempt, and failed. And, if we're thinking about an SEC that is continuing to make the same arguments in different circuits, in different districts, right? Because even as we've discussed, even judges in the same district are not bound by other district judges' opinions. I think they're trying to, from their perspective, clean up the landscape, wipe off the chalkboard, so to speak.
Josh, thanks so much. David, weigh in on this. And, we also, I'm not a lawyer, but you both are, and we have this conversation a lot. Is there a deeper precedent if the SEC loses this appeal? And let me add one other thing to that, David. If you could explain the mechanics of it, will Ripple, quote unquote, cross appeal? What's a cross appeal for those who may not understand it?
Well, first of all, I do think this is tactically a bit risky by the commission, because right now this decision, Judge Torres's opinion reflects the facts and circumstances in Ripple. By appealing this, the SEC runs a risk of having the Second Circuit confirm her view and make it broader application for secondary transactions, and not just for the facts and circumstances in the Ripple case. So my sense is that this is a risky undertaking, that understanding that the commission didn't like Judge Torres's ruling, but really running the risk of having the Second Circuit confirm this and then creating a broader precedent. So I don't know if I were sitting in their shoes if I would have appealed this, especially that it would have just been a once off in the Ripple case. But obviously, we don't sit in that chair, and they made that decision. But one thing I do want to say is that this, and I'll answer your second question, but this does have a broader impact on who comes into office next and whom they choose as commissioner. Because these are the cases that are going to be outstanding for the next commissioner. If we have a new chairperson, excuse me, I keep saying commissioner, but if we have a new chairperson, this affects their agenda in the next 4 years, or at least the next chairperson agenda. So I think this is something we really have to be very conscious of.
May I just
jump in, Josh, please.
That? It does occur to me, we've talked about in the past how on the very last day of former SEC Chair Jay Clayton's, I was going to say rule, but administration, that is when the Ripple case was launched. So it was a parting shot, right? But yet it has animated a lot of the, Chair Gensler's agenda, right? And this, depending on, your mileage may vary, but I think some are predicting that Chair Gensler will not be the ongoing SEC chair no matter who wins. Although, of course, that's, who knows. That really could be putting the quote unquote problem into someone else's lap and making it not just a Gary Gensler SEC matter.
Josh, really good points, and thank you both. You kind of allude to this. So, David, I'm going to open up this Pandora's box as well. Let's talk about the politics in an election coming up. And we have this policy conversation with colleagues and within the Wall Street Blockchain Alliance, and the three of us are not political insiders, so everything we're talking about is speculation. But is any of this appeal effort politically motivated?
Boy. Well, I do see some symmetry that the head of enforcement, Guber Grewal, is leaving, and this was his parting shot,
Right.
um, to Ripple. There's some irony and symmetry to it. Look, I don't think the political ecosystem is pushing the SEC to make this appeal or to file this appeal. I think this is being done independently. So I don't think we can look at, Vice President Harris and say, well, why didn't you stop the SEC from, filing this appeal? That's just not the way it works. So I don't think it'd be fair to put this, potentially on her. But it's not a welcome sign, for the next potential commissioner to have this on their plate.
Yeah.
So it is a headwind, and but ultimately, looking at it on the bright side, I do think that the Second Circuit will confirm this, the ruling, and it will be beneficial for the ecosystem.
That sounds like a bet that David wants me to make with him, Josh, which I will not take the bait. But Josh, to David's point, the head of enforcement for SEC announcing that they're going to be stepping down in relatively short time. I think 9 or 10 days from now, give or take. Is the industry overreading that? Because Josh, you and I have seen a lot of the articles which are, oh, people are jumping ship at the SEC. I don't, that's generally not how it works. But how did you take that announcement?
So I would say, to me, it aligns with the idea that perhaps Chair Gensler will not be continuing on, right? And that there may be some kind of a broader shift, right? So I think also we've discussed on prior episodes, this idea that some have believed that there had been, an overemphasis on enforcement, or a building up of just too big of a team, right? Versus a flat budget. And so, yeah, I think, but I do think if people do on the inside believe that Chair Gensler will be leaving, then to the extent that they have been closely aligned with Chair Gensler's policies and things that he cares most about, right, has been emphasizing, perhaps it would be unsurprising that certain key folks would leave.
Yeah.
You asked before about the potential for a cross appeal by Ripple.
Please.
So while I'm not a litigator, I think what that would contemplate is that, as was discussed earlier, the splitting of the baby by Judge Torres and saying, the sales to the institutional sales were securities transactions. That piece, one could say, Ripple lost, right?
Mm-hmm.
And so that potentially could be appealed because there wasn't a clear across the board winner.
Right. Josh, last point on the SEC appeal, and David, would love you to chime in on this as well. For those who don't know the processes associated with this, and I often ask you both pretty silly questions, this stuff doesn't happen fast. It's like this appeal is not going to wrap up by the end of the year, correct?
Oh no, this is going to take a fair amount of time. Look, I think there's the appeal, then there's the opportunity to present, to file reply to the appeal, and position papers will be filed or briefs will be filed, and I think we'll get a better sense of the length of time it'll take, generally speaking, as we sort of have a chance to digest it more. But no, I don't see this resolving anytime soon. But there could be a hope that if there were to be a new commissioner, that maybe, again, this is being very optimistic, that maybe there'll be a different view on how they want to proceed. And, who knows? The case, it could be withdrawn, but that's being overly optimistic. So I think this is going to be a story that will play out in 25 and 26.
David, Josh, this now adds to the agenda of roundup items we'll probably be talking about certainly into 2025. Let's move on, because while we talk about, David and Josh, crypto and market prices and macroeconomic policy and court cases, there's the other side of this, which is kind of the broader tokenization and blockchain world. And David, you and I have joked about, I think all three of us have joked about, is Wall Street eating crypto? I think more appropriately, Wall Street's eating blockchain and making it part of their everyday. So we see major firms, David, tokenizing everything from treasury funds to equity funds. How do you see, David, let's start with you, as Wall Street evolves, it's becoming much more mainstream. What's next? How does that percolate throughout the balance of the year and into 2025?
Well, look, I don't view tokenizing mutual funds and things like that
Mm-hmm.
as sort of eating crypto's lunch, because I just view that as taking the technology and wringing expenses out of what Wall Street's already incurring and just making it more efficient.
Mm.
Look, I think that until the regulatory environment changes here and becomes a little more welcoming, and we have some new regulations, all the sort of development and growth we're going to see, in Europe and overseas. And so that's the way I've been sort of looking at it and seeing it from what projects are doing. I think if we had some stablecoin legislation, or we had some more clarity on the status of what's a token and what's a security. I mean, and again, I shouldn't even say that, because we know that the tokens themselves aren't securities. It's just whether the transactions of the tokens are securities or not. I think that will make a big difference. So I just see it really as a technological advance here in the US with Wall Street, and then I see implementation advancing, overseas and in Europe.
David, thank you so much. Josh, when we look at it, I know you can't mention specific names of clients, for example, but when we talk about tokenization and, the builders keep building and the projects associated with that, I've got to imagine the clients crossing your desk at this point are not, a Ron and a buddy working on a tokenized project. They're pretty significantly sized firms. How does that landscape look to you as a attorney in the space?
I mean, I would say you're right, Ron. Definitely there, and David. Like, there's definitely greater and greater interest by well-established traditional institutions. That being said, I mean, Ron, if you and a buddy, you guys are deeply in the space, I think there are great clients where there may only be, a smaller core team, right? Everything doesn't have to be a giant bank or public company. Certainly, we've seen digital asset projects and teams that have revolutionized the space, and where there were, at least at the outset, some just really brilliant folks. So I would say that. Is it okay for a second? May I just mention one more thing about Ripple and that appeal?
Yeah, no, please, absolutely.
So one thing that comes to mind in terms of another reason for which the SEC may have appealed is, as we've discussed in the past, they asked for large penalties. And what actually was assessed was, I think, 125 million. And so I think if I were a regulator for a minute, if I put on that hat, cautiously, of course, I might think, you know what, that is nowhere near the kind of, shock value that we as a regulator may want to project to projects that are doing things similar to what Ripple has done, right? Because people may just say, well, that's the price of doing business, just as they similarly have done in the past with the EOS $20 million fine for $4 billion.
Right.
And so I think that could also be a motivating factor.
Josh, good point. And for the audience who may not be aware, I think the original requested penalty was over $2 billion, and the settlement ended up being 125 million or so. And David, I suspect I might be getting a draft form engagement letter from Josh in the future. We're talking about a new startup, but that's a different conversation. David, Josh, thank you both so much. One other thing to raise when we, in the backdrop of all of this, and it kind of seeps into the background now, and we added to the prep notes, but CZ now out of jail, David? And, the only headline I keep seeing is CZ out of jail, the richest person ever in the federal prison system or something along those lines. But David, do you see significance in any of that, particularly in the context of, Binance has fallen to fourth place, I believe it is, in as far as the volume of crypto exchanges globally. They've talked about doing new compliance programs. What kind of future does that exchange have, do you think?
Well, look, Binance was the forerunner really in the world of sort of the exchange and listing various tokens and enabling customers around the world to have access to all these different tokens. And I don't think that will be forgotten by the ecosystem. And again, remember, these were American laws that, Binance was viewed to have violated. I think it's really important to make a distinction between not doing proper AML and KYC checks and not properly running an exchange. And I think that's really important because there was never an allegation that they were front-running trades. There was never allegation of anything relating to the trading mechanism. It was only related to how they were dealing with AML and KYC. And frankly, from a trading standpoint, AML and KYC is really irrelevant in terms of whether an exchange is running properly. It really has to do with the vetting of the customers that are trading on the exchange. And so I parse out the two. So I don't think this has affected Binance in terms of the, people's comfort in trading on the platform. I just think that, they pulled back in the US, and I think, there have been other markets that people are trading on. But I wouldn't call this the death knell for Binance. I just think that they are going to, again, I don't have personal knowledge, but I just feel like they will recalibrate in this new environment they find themselves in and recalibrate accordingly.
David, thanks. Josh, go ahead. And by the way, I was completely joking about the engagement letter for Ron Inc. in the future. That was totally a joke. But Josh, weigh in here.
Oh, no worries. And by the way, as you guys may know, for firms headquartered in the UK, there's a whole KYC, AML, financial crimes check associated even with an engagement letter. So it's very relevant. What I would mention, I think is as being quite striking, and apologies as some people walk by, is this difference of outcomes for two, former leaders of prominent exchanges whose fates were intertwined, right? If we all think back to those days, about 2 years ago almost now, where we saw over a weekend tweets flying between and among CZ, SBF, Caroline Ellison, and everything else, the outcomes of a 25-year prison sentence that's under appeal versus CZ's out versus Caroline Ellison's getting 2 years, which we've recently learned. I think those are some striking differences. And yeah, I would just, I'll pause there. But I would also say in terms of, the size of the exchange, my recollection, although I can't remember how this came out, my recollection was that there may have been some allegations in the case itself that related to the actual trading volume, and the size, and whether there may have been involved wash trading or other things like that. So I think the question of whether there has been, some sort of shrinking going on, I think we have to look at the full set of facts. Interestingly, though, as we talked about previously, I believe, the SEC in SEC v. Binance just recently amended its complaint. Right. So that continues on.
Lots of news. Josh, thank you so much for the background. I think we've got to cut it off in a little bit, but David, Josh, a couple of other things. Just an announcement for everyone in the audience, and thank you both for your time. We are less than 3 weeks away from the WSBA's Crypto and Blockchain Summit in New York City, in Midtown Manhattan. There are block-up tickets still available for folks public facing that are not part of the WSBA. You'll get to see David on stage. You'll get to see Josh on stage. You'll get to see colleagues from S&P. You'll get to see colleagues from Citi, from Onyx Digital Assets. So it'll be a great event. If you can join us, drop us a note, info@wsba.co, and the link's on the website as well. David, as we approach, the beginning of Q4, and as you're looking for your next Patek Philippe watch that I'm sure you're going to be picking up, what are you looking for in the coming week as far as news, and where do you see some of the things going?
Well, look, I think from a trading perspective, I think that the geopolitical issues kind of derailed us a little bit as far as the momentum we had. But we're still staying in this trading range. We're still, between 60 and 65 right now. And I think that if we don't see some kind of geopolitical event in the next week, I do see us getting some more of that momentum.
Hmm.
One of the things I think is that I also think that people are starting to buy altcoins again in anticipation of a fourth quarter rally. And I think, I think people saw this last sell-off is not really related to Bitcoin and crypto as much as sort of the macro response to the geopolitical issues. So I think there is some opportunistic buying going on.
Yeah.
The last thing is I saw on an X space where the first week in the last few months sold off, and then in the second and later weeks in the month things improved. So that's been a trend over the last couple of months, and maybe this is the trend for October. But I will say this, and I'm certainly not a geopolitical expert. I do expect that Israel will respond to what Iran did. And so the question is, will the markets, both the regular markets and the crypto markets, respond to this response from Israel? Because I think it's a foregone conclusion that they will respond. So I think that is the one sort of wild card in what I think is sort of like upward momentum for the space.
David, and the market data currently, I think oil prices are now above $75, give or take. I think it's Brent crude. I could be wrong. That might parallel a rise in some things like Bitcoin as well. Do you agree with that? Is there a parallel there?
I still think that when there's geopolitical issues, that people are going risk off,
Right.
and so I think we would sell off again if there was a response. And the other thing too is that I think oil is going up because I think there's a good chance. And again, nobody's calling me up for tactical advice, but I think there's a good chance that the oil facilities will be targeted in the next response. And then if they are targeted and there is damage, then there'll be less supply of oil and oil should go up.
David, really good points. Josh, I didn't know the Gulfstream lands near Philly for you for the Wharton RegTech, but tell us what you're doing at the event. Tell us what you've got coming up for the coming week.
So it's under Chatham House rules, Wharton RegTech is, but I've been coming to it since 2017. And I would say, in addition to having amazing friendships that have come out of it and other sorts of touch points, it's always eye-opening and very illuminating. So I have to say it's probably my favorite event, subject to, of course, our WSBA event that's coming up. But yeah, so I'm learning a ton, as always, from others. One of the things that I am focused on, though, and will be, is, as we get to the end of the year, really more and more emphasis on MiCA coming into effect. Right. So I think one of the things, this comes up in a lot of ways, including, white paper requirements, including also, categorization of tokens and whether they may have some unexpected categorizations due to some specific language in MiCA. And for example, whether something actually can be a utility token versus, say, a hybrid token, those sorts of things. But I think we just saw on CoinDesk today, there's an article about a certain crypto exchange making clear that by the end of the year, it's going to delist certain stable coins that have not received authorization in at least one EU company, which is required under MiCA. And so far, it has been reported that Tether, which I believe is, we know is huge, right? I believe it's the largest issuer of stable coins, that it hasn't yet received approval in any EU country. So I think we'll see what happens between now and the end of the year, but I guess that's one to watch. What about you, Ron? What are you going to be up to?
So I'm going to spend a lot more time. I've been asked to look at the menus for the event. Apparently, we have picky members, but we'll certainly continue working with the team on event planning. Obviously, Josh, keeping track of both the macro stuff as well as the cases. Our legal working group that you're both part of, we now do deep dives on really specific topics. MiCA is coming up, Josh. It's a really good point and really good timing to raise that, certainly as well. And for me, really, it is the balance of the year and the election. A lot of the analysis we're doing, we've got a policy presentation publicly next week, comes down to what are the impacts that we can foresee of the election. And everyone's looking at the electoral map now and mapping that against which states are really deeply in crypto and how might that affect the landscape. So it's really a lot of moving pieces, Josh. So that's what's keeping me busy. Thank you both. We'll leave it there. And for everyone in the audience, again, thank you so much for joining us. If you can join us on October 24th, drop us a note. It'd be great to have you join us as well. David, Josh, always a privilege. We will leave it there. Thank you so much.
Thanks, everyone.
Bye.